We start with the market. Stocks rallying for the second straight day. The Dow and S&P closing at the highest level since early December. In one sector in particular is catching fire. Check out energy, leading the market today and up more than 20% from those Christmas Eve lows. The group on track for the best quarter since 2011. So is there more room to run? Guy. Sorry to interrupt your dancing.
Get my groove on here. The short answer is yes. Now, you weren't here on Monday, Melissa Lee, and I missed you, and we made mention of that. But one of the sectors we talked about was energy and healthcare. And energy, I still think has room, despite my negative view on the broader market. And I did mention that on Monday. I think energy can continue to go higher. Now, a couple weeks ago, we played this gate game, traded or faded, and ExxonMobil was one of the names. And I stood and looked at Tim Seymour. I said, you know what? You got to fade this sucker because I think it's going to trade down to 68. Look at where they're traded down to. Because I'm talking to the people at home. Oh. But I also said you buy it there. And now look at what it's done over the last couple weeks. ExxonMobil goes higher from here, as does ConocoPhillips. And if you want levered names, Holly Frontier's had a great couple weeks, as has Anadarko Petroleum. So despite my negative views on the broader market, which we will talk about later, I think energy goes up.
Guy, I'm looking at you right now, and I tend to agree with what you're saying. Look, there's a couple things that are going on. The storm around the expectation for oil prices or the confidence level have changed dramatically in the last 3 or 4 weeks. Think about, first of all, the Fed is ultimately going to help you in terms of your dollar call, although the dollar has actually been somewhat bullish over the last 3 or 4, call it 2 weeks. And actually, oil has performed very well. But the most important things are, it seems to me that OPEC and non-OPEC at least have their dynamics back together in terms of how they're handling supply cuts. Saudi came out yesterday and reaffirmed today they will be cutting supply. They will not be pushing more heavy, sweet, and crude going out on the back of the Venezuela cutbacks. And so, you know, the dynamic in terms of supply, I think, is in pretty good shape. Then you had the IEA come out and actually say we're going to get 1.4 million barrels a day of demand growth in 2019. That's reassuring. OPEC was lower than that. So, you know, to me, if you just want to look at the fundamentals in terms of supply demand, you've had a lot of good news.
Now, you know, every day we have a conference call, right? In the middle of the afternoon.
Yes, we do.
This is a peek behind the curtain for Fast Money viewers. We have
like Fifth Dimension.
We exchange ideas. We talk about what gets us jazzed.
It's an exciting time. We
said energy. Brian Kelly, you said, I love it. I'll buy it. I'll buy everything energy. I mean, you couldn't be more bullish about this.
Yeah. I mean, this has everything that I look for. So the biggest thing that got me today is at 10:30 we had oil inventories. It came out with a build, yet oil went up. So whenever I see price action like that, bad news or bearish news, bullish price action, it makes BK go, The second thing is we had terrible economic news out of Europe. Maybe China's still not doing well. So you have all these negative factors that should be bearish for oil, yet oil keeps going higher. You look at Brent crude, which is to what Tim was talking about. That looks like it's breaking out higher. You had a stronger dollar. That should be bearish for oil, but oil keeps going higher. So whatever you think about it, the bottom line is this thing's breaking out. You want to buy everything in the energy sector you can get your hands on.
Everything.
Well, I mean, you know, within reason. Buy. There you go. Yeah.
Yeah, but you guys are making it sound like we didn't have this precipitous drop that we've had in the last 4 months. I mean, the oil crashed, 4 months ago, and the fact that it's made up maybe a third of its losses in the last 4 months, but it's made up a third of its losses. You guys were talking about Exxon, Chevron, Conoco. Those three stocks make up 40 or almost 50% of the XLE, the ETF that tracks the S&P oil and gas sector. That thing seems kind of stuck there at $65. I'm just, let's just put that out there. I just don't see the price action in crude that interesting. I'll take you back to 8:30 this morning. We got that CPI, okay? One of the reasons why people are trying to get more bullish or constructive on equities right here is because the Fed is supposedly off the table. Well, our friend Peter Bookvar had a really good note this morning about inflation. He said, don't tell me there's not inflation. We saw the CPI up 1.6% year over year, ex-food and energy up 2.2%. What do you think is going to happen if the Fed comes back into play, or people start saying, oh, inflation's running a little hot here, maybe the Fed's back on play? We might start to see the sort of volatility on risk assets that we saw 4 months ago when things were at their highs.
I think that risk is less than it was before. I mean, the Fed has already told you in multiple different statements that they're willing to tolerate a little more inflation than what we've tolerated in the past. So I think that's off the table. Secondarily, as long as you don't have runaway inflation, then you actually want to be in stocks in an inflationary environment.
And I just want to to point out something. Commodities rally when there is inflation. So the whole point of when you want to own commodities is when we actually have inflation and it's starting to run. So, to me, if we are getting more inflation, you want to own oil. The second thing I'd say is you're right. Oil got crushed. And whatever the dynamics were, you can make an argument that positioning in the energy sector is the most important reason why you want to own. I talked about fundamentals, but I think this market is, and I pointed out the short interest in the sector is at record highs. I'm talking about record highs. So it tells me that people don't like this trade. The fact that the XLE has outperformed the S&P by 700 basis points since the low of the markets tells you, again, we know the pain trade was higher. The pain traded energy is that much higher than that in the S&P.
What seems to be slightly different is what's happened in the past couple of days, and that is that we have learned that OPEC has really been standing by its production cuts, and that Saudi is actually going to take off 500,000 barrels per day more than what they had pledged back at the meeting. And so you do have supply being kept in check, and that's an incremental part of the story.
Which is helping the story. But to BK's point, I think he made a great one. Oil inventories were up 3.6 million barrels. That's 50% more than the street was looking for, and crude rallied despite. Right. And in terms of the Fed being focused on inflation, the only inflationary thing they're looking at is the move in the S&P 500, respectfully. So until that sucker gets back to all-time highs, which we're still a ways away, I think the Fed's probably on hold. They told you that. I don't think they're right, but that's the fact. So I do think energy on a benign tape, stocks can continue to go higher.
I have a question. At what point does a strong dollar start to hurt energy prices? I mean, it could be any day now, theoretically.
It could be any day. It is a correlation, but it's dependent on why the dollar is strong, right? So if you have a strong dollar and a very weak global economy, yeah, that's going to hurt oil. But if the reason why oil is going up and copper people are getting excited about and all these commodities going higher is that they're betting that the economy is going to get better, we're going to sign a trade deal with China and all of that, then oil and the dollar can go up. But the risk is, to your point, at some point, higher oil prices make higher interest rates, and the Fed can put cold water on.
But a year ago at this time, the expectations for Fed increases or rate increases were 3/4 points. Now they're off the table. This is for 2019, right? So what happened? Once we saw the dollar start to go up, we saw crude get nailed. So everybody here is looking at the dollar saying, looks pretty constructive. There's no expectations for rate increases in 2019. So if we have inflation start ticking up further than that 2%, but somewhere maybe it's above 2.5%, I'm just saying, then do we get the Fed back on the table? Then do you see oil stocks crater again? Because
but the point between here and there, you can make money. I mean, we're talking about maybe 6 months from now.
Guys, if the Fed is back in play, everything that we want for oil and everything we want for markets is in play. Again, we want growth. We want inflation. We want things. CPI, to me, and I think Peter Bookbar's work is some of the best out there. So I agree with that. But I don't think that this is a dynamic where we're worried about inflation. Again, a growth scare is much worse than an inflation scare. I'd like to see the Fed back in play. I think the reality is the dollar's moving higher because we've had a lot of weakness in Europe. And while, of course, a flight to quality could come from Europe exploding, I talk about that all the time. But the dollar strength, we're talking about 1.5% to 2% over the last 2 weeks. But it's range bound. The dollar's been range bound since last July. Until I see otherwise, that's where we are.
Look, just to button it up, I think the Fed should be in play for a lot of different reasons, but it's clear now their mandate is to get asset prices higher. So again, until the S&P 500 gets to anywhere close to 2,900, I think they're on hold. I'm not suggesting that's right. I just think that's the way it is. In my world, I think energy stocks go higher.